Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video, and you're going to notice it says November 11th, 2023. That means it is Saturday. That means it's also Veterans Day. So happy Veterans Day for all of you that have served in the armed forces, no matter what country you lived in. You know, just thank you for your service. I'm sure the people that live in your country really do appreciate you. I know we do here in the United States. So happy Veterans Day to all of you. Now, I also want to say that we're going to get into the week ahead video. This is the week ahead video for the 12th on Sunday, and it'll be for the following week. So we've got a lot of trade ideas, and matter of fact, if you like the format, and it looks like a lot of people like the format that we followed last week, where I put my best 3 trade ideas at the very end. If you like that, make sure you give us a thumbs up, subscribe to the channel down below, comment down below if you have any other trade ideas that you're thinking of. Maybe you don't even agree with the things that I'm talking about. Please put your comments down below. It helps the channel when you do that. I also want to say that that you can skip ahead and get to those. But I also want to say we're coming into the holiday season for a lot of people, for most people, and you know, I know things might be tough. It's a tough economy. Looks like we're probably heading into a recession, and so you know, don't risk your own capital when you're trading if you don't have to. You can risk our capital. Check out the trader funding program. See if it's right for you. See if you want to take an assessment to see if you can qualify to trade our capital. The requirements have been loosened over the course of the last year and a half that we've been offering this program to so many traders around the globe. So see if it's right for you. Check out the trader funding program, and that's a great way to get involved in Forex analytics, especially if you want to be involved in our community. You can try it for 10 days for $1, but if you want to just be involved in our community straight away, it's included in the trader funding program. All right, so with that being said, I'm going to go ahead and move along, and we're going to get into the markets and talk about. Well, last week was kind of a dull week, right? The market was kind of slow. You can see that we can go over to just the. Let me just show you the S&P live chart of the S&P here, so you can kind of right there. I have it as the second symbol. And I mean, you look at the S&P, we closed out the week near the highs, and we closed it near that 44.15 level that was really critical. But you know, when volatility is low, markets tend to grind higher. The reason why, there's always this insatiable amounts of money just constantly coming into the market, you know, whether it's through asset allocation that's automatic from people. Institutions need to be involved. The market's just, FOMO in general. The geopolitical risks haven't gotten worse. So, the equity markets did end up on their highs, but that doesn't mean that that's going to last this next week. We've got more volatility this week probably coming. A couple of things that are happening this week that we should be talking about. Let me go ahead and I need to grab my notes here. Give me 1 second. So late in the day on Friday, Moody's did a few downgrades. So just be careful of opening prices on Sunday. Let's see how the market reacts to some of those headlines that came out late on Friday. It's also CPI week, so it's inflation week here in the US. A lot of traders are going to be looking for that data that comes in on Tuesday. We got producer prices on Wednesday. We're going to talk all about that here in a second. One of the key events this week is President Biden and President Xi are meeting. It's the first time they're meeting in about a year. This is a quote that came from a senior Biden administration official. He said, it's expected, or they said, it's expected to cover global issues from Israel, Hamas war, to Russia invasion of Ukraine, North Korea's ties with Russia, Taiwan, the Indo-Pacific, human rights, fentanyl, artificial intelligence, and as well as fair trade and economic relations. It's really just geared to kind of bring the tensions down between the US and China. So that could really change risk sentiment middle of the week, because this does all transpire on Wednesday. So just keep that in mind, guys. That's something that we have to keep in the back of our mind. Also, one of the other things, did I mention already, the government may shut down? We might have a government shutdown on Friday, on the 17th. There's there might be some appropriations bills or bills passed to try to keep the government going while two sides are fighting it out. But we also have earnings, and earnings are kind of important this week. They're not as important as the technology companies that were out, but we have a lot of retailers that are reporting earnings this week. And the reason why that's a big deal, because we're all looking to see how's the consumer taking in this really absurdly, for a couple of years, higher inflationary pressures. So we're going to hear from Home Depot, TJ Maxx, Target, Walmart, Ross Stores, Alibaba, Macy's, Gap, Bed and Bath and Body Works, or whatever they're called. And we have a couple technologies companies like Cisco and Applied Materials that are also reporting as well. But the reason why is you take these retailers from whether it's Home Depot, whether it's a discount retailer like Ross Stores or perhaps TJ Maxx, and you got to listen to those earnings calls, or at least some of the headlines that come out of there, because that's going to tell us a lot about the consumer and where people are spending. Are they shifting, towards discounts, or are they spending money more on, home remodeling and versus buying new homes and having to buy all new stuff. It's an interesting dynamic that most economists are really tuned into, because most people feel we're on the cusp of a recession. All right, so without all that being said, let's go ahead and get started, and we're gonna talk about going through the week, and then I'm gonna go through some of the different charts as they're coming along. Now, on Sunday night, there is some data out of China, which is really new home loans data out of China, which is going to be important for risk in general. And I'll start really with the S&P, because even on Monday, if you guys wanted to take, by the way, if you wanted to take like a 3-day vacation break, Monday might be kind of slow. It's Remembrance Day out of Canada, but there's not a lot of data coming out. Tuesday's the day you need to be in front of the computer. Tuesday, Wednesday, and the rest of the week. But Monday might be a little slow. But remember, we have to see how the markets react on Sunday night following the Moody's downgrades. So last week we asked the question, can the rally party continue? Obviously, yes. So when you're looking at the S&P, the couple things I want to highlight here is that we did break this resistance, as we talked about, and we did tag the 618 retracement and stop there, as discussed all week on the face show. Now, remember, if you don't know how to get to the face free shows that we do every single day, so you can get an updated view of not only me but the rest of the team, you can listen to the face show right here. It's free. You can just register with that link. The Flow show is also a free show. It's during European hours. If you're not listening to that show, you should be, because the information you get from Ryan Littlestone and K-Man is invaluable. And if I wasn't sleeping, I'd be listening to that show as well. All right, back to what I was just talking about. So on we talked about the S&P reaching the 618 retracement. We're here. Question is, can we continue? And I think at the beginning of the week we probably can. It depends how we respond to this Moody's, some of these Moody's downgrades. But you'll notice that we're really in more of a resistance zone. When you're talking about the S&P from here to here, we get much above like 4430. The next resistance really comes up around 4500. So, is that entirely possible while still maintaining a bearish, a bear market? Yeah, I think so. I think we're in a bear market, and we're just eventually going to end up rolling over. But whether it's at 44.30 or 44.15, where we stopped at on Friday, or we reach for 4,500, probably has more to do with everything that's happening throughout the course of the week with President Biden and President Xi, and with those talks, and how the tensions are from there, CPI data. That's going to be all the determining reasons why, if we are going to just turn lower or continue higher from here. So going through the rest of the week, we have UK data coming out, and there's going to be a lot of UK data this week. Now, I remember last week we talked about the 200 DMA being resistance. That's why I drew this green line or green squiggy last week, and that has held. Now I want to show you something that's pretty important with the sterling, and I'm gonna come back to the sterling a little bit later because this is one of my trades of the week. So just if you're so excited and you can't even wait, you just want to fast forward to the very end, you can do that as well. But you'll notice that we are at a 618 retracement. No matter if you draw it from the lows or you just take this last move, we're basically respecting the 618 retracement around the 122 level. Now there's a ton of UK data this week, but to kick us off will be Tuesday morning. You have claimant count change, or jobless claims, basically average hourly earnings. Also on Tuesday, we're going to have German ZEW data. Now the euro was one of our trades last week. We're looking for a move to the 200 DMA or above this 38% retracement. We still haven't reached for that, but the consolidation has been real. It's a real tight consolidation. So perhaps the German ZEW numbers are going to be the data that drives us back to the 50 DMA or channel support here, or is going to be part of the the data that drives us back up towards that 107.75 38% retracement that we're looking for. Now, why is the German ZEW data so important? Because the German economy has really shown a lot of weakness this year. And so, to see sentiment readings from the ZEW is going to be really important this week, I believe. So just watch the euro on Tuesday, with those German ZEW data. Now, let's talk about US CPI, because US CPI is coming out on Tuesday, and this is where details are going to matter. And I'm going to not go over to the dollar index just because the dollar index is really mostly euro, and I think it's going to have more of an influence by what happens in the euro, and you just saw the euro. But keep your eye on the US dollar Japanese yen, and keep your eye on yields. The yen has been incredibly weak. The US dollar Japanese yen has been insatiably strong. Now, like I was just saying about the CPI, the CPI is all going to be about the details. Where's the core reading? Because core is supposed to come in at 0.3% month over month, just like it did last month. Does that move? The CPI data, the headline number is supposed to drop, but the core data is supposed to stay in line. And then, your year over year CPI is supposed to drop to 3.3% versus 3.7%. If that comes in a little hotter than expected, the reaction you might get might be out of the actual dollar yen, because it looks like channel resistance is up here around 153. And again, it hasn't really pulled back. On top of that, you got to be watching yields, because yields, like you can just talk about the US 10-year yield right here after completing this, this move lower. If yields start to perk up again, and we are ending up forming some sort of, like, let's say, head and shoulder pattern in the 10-year yield. Well, if we have to go higher in yields going into the Tuesday of next week when CPI is released, if we rally towards that resistance, what does that do to the dollar yen? The dollar yen might actually break above 152. So there's something to be thinking about as we go into this next week, especially with CPI. But it's not just CPI, because we have producer prices actually on Wednesday that could be that 1-2 punch that we have to be thinking about. Okay, before I get all the way over to producer prices, let's talk a little bit about Tuesday night in Australia, but it'll be obviously Wednesday in Australia, or Tuesday night in the US, Wednesday morning in Australia, and out of China. You have Australian wage price index, and then you have China industrial production, retail sales, unemployment rate, a lot of Chinese data. Now, here's the issue with the Aussie dollar. We had the RBA meet this week, and the RBA was not kind to bulls. Obviously, if you're bullish, you're probably crying, or maybe you've gotten over it already a few days later. The problem with the Aussie, and you know, and I told our traders as soon as that RBA decision came out, I tried to play it long, put in a 10 pip stop, got stopped out, and I was like, nah, then once we got an idea that Michelle Bullock was like, oh, it's one and done, that really got a lot of people that have been getting long the Aussie over the last month because it's been holding up so well, really destroyed them. Now, throughout the course of the week, I told our traders, on the Face Show and in the Morning Edge and the Daily Roundup Show, which is a private shows of Forex analytics, I was telling traders all week, I'm like, that is the last place I want to be, trying to play short dollars, is the Aussie dollar. That I'm not playing that on the long side. I mean, because the positioning was so skewed for traders getting long Aussie dollars that let out, you can see it just kind of just drained the energy out of the Aussie. Now, the good news is perhaps the Aussie will make a higher low. I'm not convinced, and I don't really have any desire to trade the Aussie, but if you look at like the Aussie Kiwi came off pretty hard. Let me see if I have it on my screen. I don't, so I'll just draw it. You can see how I look at it normally, or well, I can do it this way too. If you look at the Aussie New Zealand, and I'll just pull it up over here so you can kind of see the analysis on Forex Analytics. It looks like we've come down to some pretty critical support, and I've gone from red with the basic technical analysis back to neutral because we've found support at the 50% retracement. So we rejected this resistance up here, and then this week the Aussie Kiwi broke down. But now that we're back at the 50%, maybe more neutral, perhaps the Aussie might find some footing this week, and I'm sure Aussie bulls would be really happy if that ends up happening. But anyway, Aussie wage price index and China industrial production, retail sales, and employment rate could theoretically really influence the Aussie midweek this week. So it'd be Tuesday night. Now on Wednesday morning, we do have the UK CPI, which I mentioned that the sterling's going to be pressured one direction or the other. Again, we're sitting at the 122 level support. But just remember, UK inflation has been stubbornly high. And so this inflation data, even though it's expected to drop, and let me look at that data. I believe it's supposed to go from 6.7% year over year to 4.7% year over year, something to that nature. It's still high, although the GDP data last week came in. It didn't dip into contraction territory, so I guess that's good news. But inflation continues to come down. Hopefully, if you live in the UK, it comes down a little bit faster than you expect. But the sterling will be influenced because of that. Now we have UK PPI. I guess I will pull up the dollar index here just so you can take a good look at the dollar. The PPI data is going to be important because it's the producers, and the producer data feeds into the consumer at some point. It kind of like rolls downhill, if you will. So keeping an eye on the producer prices is going to be really important. But also, that's being released on Wednesday is going to be retail sales and Empire State Manufacturing. Now the retail sales data is going to be pretty important because obviously as we're coming into the holiday season, a lot of people are anticipating this holiday season to be really, really poor. But the other thing that we need to think about as far as retail sales go is how is the consumer holding up in general. So that data is going to be really important. Notice how the dollar index is like a magnet right here at the 105.90, 106 level. It was the huge breakout point. Even though we might still be developing like a bull flag pattern, it is just very, very critical, pivotal area for the dollar index. So it's kind of like do or die around these levels. So am I expecting a bull flag pattern breakout, going this direction this week? I mean, it would have to start off with really strong inflation and then also really strong retail sales and producer prices. So in inflation, CPI, PPI, and retail sales, we could very easily be trading well above here. I'm not convinced yet that inflation data is going to be doing that just yet. So just realize that the 106 level remains very critical pivot. Let's just call it a pivot. Also, what's happening on Wednesday, I should discuss is we have crude oil inventories. Now, reason why we should watch crude oil inventories because the crude oil is back at 70 in the 70s again. It's at, it's holding the 618 retracement of this entire move. You can see it's holding it, and it held it really well at the end of the week. We couldn't really break. We came off. We basically held the 618, and we're just stalling at the 618 now, bouncing off it. Now notice the 200-day moving average is right above there. So I'm going to give you a real quick down and dirty. If you're a crude trader, here's a potential trade. Above the 200 DMA, you're going to get a little squeeze. Below 74.50, you're probably going to trade back down to $70. I mean, it's a pretty straightforward. When you're looking at a tight range. Above the 200 DMA, it might get some buyers in, get some buyers chasing the market. Flip side is, we break below $75 or $74.50 or whatever that number is, we might trade back down to $70, where I think there's going to be a massive amount of support on any dip. But remember, we have crude oil inventories on Wednesday. Now, going into Wednesday night, back over to the Aussie. Let's just turn it back to the Aussie really quick. We have Australia employment data. So that could be a market mover. On Thursday, we have weekly unemployment claims and Philly Fed out of the U.S. Now, let's discuss, since we're here talking about the dollar, let's go back over to the euro really quick. When you're talking about unemployment claims is pretty much the data that we get every single week that's going to give us a pretty good indication on the strength or the weakness of the labor market. Because those unemployment claims, they come out every week, A, but B, we can really identify a really good trend, whether claims are starting to trend higher or lower. I just met with Jim Welsh of Macro Tides on Friday, as I normally do. And he thinks, based on the talk that we had on Friday, that unemployment claims are on the cusp of starting to move higher. Now, we've been in the low 200,000s like every single week, low to mid. Once we start getting above 250,000, unemployment claims every week, that's when we really should start paying close attention to this jobs data. And could that happen this week? Maybe, but that's when you're going to start to see way more volatility. Okay. Now on Friday, we have UK retail sales. One of the other pairs I should actually bring up really quick, since we're talking about sterling, and I haven't talked about the pound yen in a while, but the pound yen, just take a look at this chart. We're making higher lows. Yes, you could say we're making lower highs, but we're also on the cusp of actually breaking higher, especially if the UK data comes in better than expected. Also, understanding that the yen is so weak. If you look at the euro yen just continues to rip higher. Matter of fact, I think we're going to hit the 161% extension of this move maybe as early as this next week. Been kind of anticipating a move up towards 163. If you go into the Forex Analytics chat room, it's I think myself and one of our newer traders in there, HB, we're talking about the euro yen. You can see we had this big conversation earlier this week about where we're going in the euro yen. I've been targeting up there all week, trying to get up there, and we were talking about what we're going to do when the euro yen makes it up to that level. But I think that's where we're going now. If that's happening and the yen continues to weaken, you saw the dollar yen that looks like it could get to 152, maybe even 153. How about if you apply some strong UK data to that mix? Next thing you know is you got the pound yen, breaking out. And I know this. Let me just show you really quick. This is a weekly chart on the pound yen. We're approaching the 88% retracement of this entire move, right? So, yeah, go a little bit there. There you go. And so, break above that. I mean, do we trade back up towards these highs that we saw back in 2015? Again, the yen looks weak. Sterling looks like it could start moving higher. How about if people start looking at the UK economy and saying, hey, wait a second, maybe inflation comes down, GDP continues to stay flat, and maybe the UK can avoid stagflation. And with this, but still, since inflation is so high, the Bank of England has no choice but to start raising rates again. If that becomes the theme of the market, next thing you know, you have a pound yen that's trading significantly higher, especially if the BOJ or Ministry of Finance isn't doing anything about it. Okay, so anyway, we have UK retail sales on Friday. Last thing that's happening on Friday is going to be US building permits and housing starts. And we do have, European Central Bank Lagarde. She's speaking at a banking conference on Friday morning, just to pay attention to that as well. A couple other things we should be looking at. Let's look at before I get into the three best setups of this week. We should be talking a little bit about crypto. Bitcoin is above the 38% retracement. I said 38% retracement, and it's on its way towards. Let me remove that. It's on its way towards 42,000. So just with this Bitcoin ETF, it looks like that's the path of least resistance. Ethereum is making a move. I did a YouTube short on Ethereum and Bitcoin this week at lower levels, telling you that they probably got further to go. And I'm long a little bit of Bitcoin myself, and I think that we could trade up towards maybe 2,200, maybe 2,400 in Ethereum. Bitcoin, like I said, 42,000. 50% retracement seems pretty logical, especially as they're looking to approve an ETF. So keep an eye on crypto. Also, you look at gold and silver. Gold has, now I got to show you this chart. This is the gold chart. We haven't looked at this in a while, so let's go to it and let me zoom in. Now, one thing I wanted to show you regarding gold, we had this flag was building and then we broke lower, but before you get all excited and saying, oh look, a flag that didn't break higher broke lower, it did. But what happened also is that we stopped at the 38% retracement and the 200 DMA. So before you get really bearish gold, this can still be very constructive, especially if we can hold this 38% retracement. And if you look at silver in essence is still trying to develop. Let me just show you really quick. An inverted head and shoulder pattern. And I think if we can hold these levels, like right where we're at, there is a risk that silver can still reverse higher and still play out an inverted head and shoulder pattern higher in this bigger range. So something to keep in mind if you trade precious metals. I did talk about the S&P and what my thoughts are on the S&P. I'm going to get into my thoughts on the NASDAQ 100 here in a second, because that is one of my next best setups of the week. So just stand by for that. But I did want to discuss the DAX, and we might as well actually get into some of the reviews of the setups from last week. So last week, I'll start with the DAX. The German DAX closed at, well, basically channel resistance. We reversed. Remember, we were looking for a move towards channel resistance. As long as we stayed below here, it looked like a good short, right? So if some of you traded on the short side of the DAX last week, congratulations. But here's the thing, in order to get some further follow through to the downside, you're going to need some participation from the US equity markets, I think. Again, my whole reasoning for the DAX being one to really target on the downside is the German economy is so weak compared to the rest of the world, but really to the rest of the world. And considering it's Europe's manufacturing hub, if you will, it still looks like it should underperform. But in order for this to continue lower, we're going to need some downside pressure from US equities, in my opinion. One of the other things we talked about last week was the euro dollar. We were looking for the euro dollar to make it up towards the 200 DMA. Don't write that one off yet. I really think it can still make it to the 107.70 to 108 level. I am still looking for a short if we get up there. I played the euro a couple of times this week, so but my big trade that I'm still looking for is a short up at those levels. The last one we talked about, which held like it was nobody's business, was the Euro Aussie. We held this trend line. We couldn't break it. We started the week slightly below it, but that wasn't convincing. You know, when we were like 20 pips below it, I'm like, yeah, I ain't gonna do that. But I actually played it to the long side last week because it held, and you know, it held. But I didn't play it for that long. But take a look at the Euro Aussie. What a really, really strong reaction from that trend line. And we were discussing last week, you can play it in either direction, you know, depending on how you feel, you know. And the Euro Aussie held that trend line like it's nobody's business. So congratulations for those of you that traded it off of that. Now going into this week, NASDAQ 100, that's like number one. I did tweet about it on Friday. Now the reason why I think this is really important to look at, and I'm gonna do some work here with you. Let's go over to the weekly chart. Now what you're going to notice with the NASDAQ 100 is we are basically trying to break out, and you know, the oops, that isn't the NASDAQ 100. I'm sorry. I was like, wait a second, that isn't the right chart. I'm looking at it going, maybe it's a different feed. No, that's not. It's NASDAQ versus the S&P. Let me get you over to the NASDAQ 100. Here we go. Okay. Now, if you look at this trend line here, this is the trend line that I'm really focused on, but we do have a bull flag pattern. Now, if this bull flag pattern decides it really wants to play out to the upside for whatever reason, because people feel that Apple is a great safe haven trade to be long, hey, maybe that is what the market feels. Anyway, look at those targets in case the NASDAQ 100 continues to break out. Now, we are breaking out. The question is, are we going to be able to break this resistance and challenge those highs? And I think it has more to do with what happens with the S&P. If the S&P can break into new highs above 44, 15, 44.30 and get to 4,500, in my opinion, the NASDAQ 100 should challenge its all-time highs. So keep that in mind as we're going into next week. Now, I also mentioned that Cisco and Applied Materials are reporting a couple big earnings plays in the NASDAQ 100 to be thinking about next week, but the NASDAQ 100 looks bullish. You got to be careful though, and let me go over to a 4-hour chart really quick just to show you two things. The 127%, whoops, that's not what I wanted. Let me get rid of that. The 127% extension of the last down move comes in at 15,700. You know what else comes in right there? The 88% retracement of this entire move comes in right at that same level, and then you have this trend line that also comes in right there. So it's going to be a real confluence of resistance is going to be right here at this level. So that's what bulls are going to have to contend with next week should we make it up there. But I think that it could be dragged higher because the S&P still looks like it wants to go higher as well. Now, the next setup that I want to talk to you about is the US dollar and Norwegian krona. I am short a little US dollar and Norwegian krona. The inflation data came in stronger than expected. I want to show you this chart, which I think is really important. That's channel support. You see it? Because you might be like, oh, Blake, you're already short. Well, is it too late? Can I not get short too? I think if we start breaking through channel support right here around 11, especially through this support that comes in at like 1097 or something like that, we start breaking through this level. Here, let me move that. We start breaking through this level. You're probably gonna see some continued downside pressure in the US dollar Norwegian krona. Also, if crude oil gets back above the 200 DMA, that's also going to be another catalyst that drives this pair lower. Now, here's where the risk is. The risk is if we break above this massive trend line here, you know, it is going probably back to 12. So you know where your risk is at this point, and you know when you trade, that's pretty much the only thing that you can ask is, you know, where's your risk? That's because that's what you can control. All right, and then the last setup this week is going to be for the sterling, or the pound, or the pound sterling, or the Great British Pound Sterling, or I'm joking. If you live in the UK, I said all of that just to annoy you. Okay, so here we are. We're at the 618 retracement. Look at the daily chart. Okay, we're at the 618. No matter if you draw from there, if you draw from here, we're basically respecting that. Now I want to draw something else for you that you may not be looking at. This is also a potential triangle, or you know, triangle that we broke out of, and we're respecting the the trend line as well. So basically, if we can hold above like 121.60 or so, I think the risk is that we make a move back towards the 200 DMA. Now, with all that being said, let me just also mention that there is so much UK data this week. So you know, if you're trading the sterling, if that's going to be the trade that you're trading, you know, be watching the euro sterling at this 87.50, which is a big 50% retracement, fib level, false breakout. We're talking about it all week this week in our shows. Watch the euro sterling, it's going to influence the pound. Watch the UK data that's coming out, that's going to influence the market. And with that being said, guys, gals, if you like this video, make sure you give me a thumbs up, subscribe to the channel down below so you don't miss any of this data. Comment if you have any comments about any of these setups or how you're trading them. Love to hear from you. And happy Veterans Day for those of you that have served your country, because I'm sure your neighbors really appreciate that you did what you did. So thank you. I'll see you on the Monday Face Show. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.